right, so how to invest $50,000? Have you ever wondered what you can actually do with $50,000 invested into what kind of property and where and what kind of return that is going to get? Welcome to the Young Money Hackers podcast. You're here with HD, I'm Charlie, and we're going to do a little exercise here to demonstrate what is actually possible when we invest $15,000 into a property. So HD, do you want to run us through some numbers of like what we can do here?
Sounds good. Before we get into this, right? I mean, people have to understand that property isn't just like this one giant thing that you have to conquer and like you have to have $1 million to get in. You know, that's not what we're doing. Property is a tool to make more money, and that's what we believe right here, Young Money Hackers. And this is what we idealize, Charlie and I, and many other investors in property idealize as the first property that would be the most ideal to help you enter into the second, third, fourth, and so on, where each asset is going to bring you more money in your pocket, both by equity and by cash flow. That's the goal here today. So this is what you should typically be looking for. And yes, they do exist. We were looking at real market data, real market investments that we can find here right now that is able to achieve this. So we're not just pulling, figures out of thin air, although that's what it's going to sort of seem like, but we're just going to run through what that's going to implicate. So let's, I'm just going to throw it back to you, Charlie. So what kind of houses are we buying? How much are we spending for starters?
I mean, so we're going to be looking for the houses around $250,000, right? So something relatively cheap, relatively inexpensive, something that is accessible to what I would say the average person, like that serviceability can be done with,
And is the person that's buying it going to live in this?
No,
they're not. Cool.
This will be an investment.
Cool. Yeah. Fantastic. So $250,000. Okay, you need some money to invest into this. So as somebody who has $50,000, they would also be making some money to be able to do that. So like, do they also need to have a lot of income every year to be able to afford to buy a $250,000 house?
No, you just need to be able to come up with enough money to actually acquire that property. Mm-hmm. So the down payment or the equity deposit, the purchasing costs, so your stamp duty, etc. Mm-hmm. And then maybe a little bit of money to renovate the property so you can increase the value and capitalize when we look at the numbers on the cash flow.
That's right.
That's what will help increase our cash on cash return.
That's right. And so if we just bring it back a bit, so you've got 50 grand and you could be like a nurse or something. You could be an admin assistant, whatever, making about $60,000, $70,000 a year, right? This is possible for them to then buy a $250,000 house with $50,000 in the pocket. Okay, cool. So most properties need a 20% down payment and you borrow 80%. So after I do that, I basically have no more money to do anything. So what's our strategy here, Charlie?
Okay, so what I would say is you don't put down 20%, put down just 10%. So on a $250,000 property, it's $25,000. So that's half of our piggy bank gone on that down payment.
Great.
And yes, you'll have to pay LMI, right?
That's it.
To do that, and that doesn't have to be paid up front, which I think a lot of people don't realize. It'll be a couple of grand. It'll be a few $1,000s. Sorry, it'll be
about $5,000. Yep, that's right. Yep.
It'll be about $5,000, which is about 2% of the value of the property, and we can tack that onto the loan amount, so we won't notice it as much, right? So it's about getting into the property.
So we're borrowing $225,000 plus another $5,000, right, to then be able to buy this house. So you're borrowing $230,000. Is that correct?
Yeah, that's it.
Perfect. So $230,000 is what we're borrowing, okay, to buy a $250,000 house. What about the closing costs? How much are the closing costs? Like stamp duty, conveyances?
Yes, that'll be about $15,000 as well.
Sounds about right to me.
So now we're up to we're up to 40K.
40K
out of our piggy bank.
Cool. Yep. So now we bought the property. Yay, it's great. What do we do with the property?
So we'll spend another 10 freshening it up, touching up the paint, making it look presentable, making it look rentable to attract those people in there to rent it out as their home.
That's right. And so, you said painting. What are some other ideas we have? I think I could come up with maybe do the carpets again. Bit of kitchen, just painting things
kitchen.
Up. Yep.
Like painting the cabinets goes a long way. It can make the whole kitchen lighten up again. Carpets, as you said, painting. Fixtures is another one.
I guess most importantly, you got to look at what the other properties in the area are doing. You don't want to obviously paint it with gold when it's a low socioeconomic area, right?
Yeah, exactly.
And then you're gonna stick to your neutral colors and everything. We will have a podcast dedicated on renovating property for the purpose of investment. So make sure you guys stay tuned for that. That means you need to subscribe to Young Money Hackers today. Now, so we're spending $10,000, okay, on a rough basis. We're spending $10,000. Okay, so why are we doing that? How much money are we going to make in terms of rent? How much rent are we going to collect on a house like this?
So if we assume that post-renovation on that $250,000, we can get $400 per week. Now that might seem like a lot, but we just had a look, didn't we? And we saw that that's conservative.
That's conservative.
Okay, so that's 20 grand a year.
That's right. That's crazy.
So that's crazy, isn't it?
$400 a week is what we're going to pick up on rent. Great.
Yeah. Yep.
Hold up, Young Money Hackers. We got some exciting news to share with you, because it's all well and good to hear what's going on, but we'd hate to see our Young Money Hackers only listen and take no action. So we've been working on some game-changing tools that we wish we had before buying our first investment property.
Exactly right, man. And it all starts with numbers. Property investing can feel like an extremely overwhelming process because it's the biggest financial decision that most people will ever make. So we have developed a property investing calculator that will make this whole process effortlessly. And seriously, man, I'm actually so blown away at how easy they are to use. All you need to do is put in your numbers and the info will tell you if that property is worth it or not. I'm actually so proud of them. Genuinely can't wait for our young money hackers to get their hands on this experience. But that's not all that's new here. We also have a mentorship experience.
And that's right, we want to share with you all the juicy details to see you through to that end goal where you're profitable on your property investments.
We also come across so many investment opportunities given the property space we play in, so it'd be rude not to share those with our young money hackers. So if you'd like to get your hands on some of the deals we are talking about on the podcast, we are offering acquisition services where we and our team will hunt down properties for you to push the button and get started to add to your property portfolio.
And what a dream it is, Charlie. And there's more. We're going to hook you up with top-notch property finance and insurance so we can all sleep at night.
But HD, what if I don't have the money to invest in any of these services right away? Is there anything for free?
Well, actually, we can help you with your finance and insurances for free. Plus, there are a ton of free resources we have for you, like some of the investment calculators, books, and tutorials available on our website.
Well, you heard him, everyone. So head over to our website, youngmoneyhackers.com, or simply click the link in the description. Check out our investment calculators, learn more about our mentorship program, and explore our acquisition services. At the very least, don't miss out on the free resources we've put together to help you guys get started. Now back to the podcast.
Another reason why we only do $10,000, I think, that just if we just backtrack and I just mentioned another point, is we also don't want to be doing renos until the cows come home, because when you're doing renos, you're not collecting any rent. So
exactly,
you don't want to do such a big reno that you're not cash flowing for that long. Then it can really fall flat on its face. So how much time are we spending on reno? Would you say?
I would say a month.
Yeah, 4 to 6 weeks is what I was thinking. Max.
Yeah,
max. Because that's all cash flow gone, you know what I mean? And so if you can spend a bit more to find quicker trades, that's time value for money right there. So,
yeah,
you know,
good. It's well spent.
Exactly right. Obviously, you want to work with quick and try to find your trades during your settlement, not during your conveyancing period between the contract and the settlement date, and organize them all up, and rather than wait for the property to become yours and then start looking for people, right? Because trades in Australia, they're so hot. They're a few weeks away, usually when you give them a call today. So that's really important.
Yeah.
Okay, so you're making $400 a week. That's 20 grand a year, right? 20 grand and $800 to be exact a year. On a $230,000 loan, on interest only at 5.5% loan, which is the loan amount today, you're paying $12,600 a year.
Yeah.
Right? So the gap there would be that you're making $8,150 after your repayments, and then I'll say after rates and taxes and what have you, and also any agent fees or whatever, you spend about $1,500 if you're really good. So you spend $1,500, insurance, everything, it's all in there. Spend $1,500 and it's gone, and then bam, that gets you down to $6,650. That on the initial investment of your $50,000 is 13.3%. Now, if you think that we're pulling dumb numbers out of thin air, right? And it's really stupid. And we should have probably cut back down more on the cash flow. That it doesn't cost $1,500 for everything. Well, yeah, let's take down a bit more. But even then, we're well past the double-digit returns. That
we're still over 10% cash on cash.
Cash on cash.
That is not including capital growth.
Not including capital growth. That's exactly right. And so, with that being said, if we look at capital growth, just on the renovation alone, would have gotten you. I mean, you spent 10 grand. That would typically bring the price up of that property up to about 300 grand. So that's an uplift of 50 grand, right?
Yeah.
So,
I mean, that's insanely good, isn't it? If you know what you're doing when you're renovating, you can literally invest $1 and get $2 to $3 return.
Exactly. And then and then once you have that, you're going to get 5% on that as capital growth, which is a very average return, right, across the country in the first year. So on the new value, let's just call it $300,000 for ease of sake. 5% of that is 15 grand. So you made another 15 grand on top of your cash flowing return. So with capital, including the cash flow, you got 6,650. You're making 21,650. Divide that by 50,000, multiply by 100. That's 43% return on your investment in year one.
You could say that if I said that publicly, people would tell me that I'm full of shit.
Yeah, exactly.
But when you actually do the numbers and you know what you're doing, this is how people accelerate the journey so much faster than others. This is literally what they do.
Exactly. You would have taken the person without property, say 3 years to save up 50 grand, 4 years to save up 50 grand, let's say, because they live with their parents, they're frugal, whatever, right? They're saving 10, 12 grand a year, right? Let's say, which is doable. It might be immensely impossible for you, but it is doable. There are people out there, young people out there that are doing it, right? After uni, they get their first job and they save as much as they can, or they earn more money than 60, 70 grand a year, right? So they save 50 grand to be able to do this. After you buy this, after a year, you only need to save. So we can't pull the equity entirely, but let's just, for the ease of argument's sake, you're pulling the equity entirely, 15 grand plus the 6,600 to 21 grand. You now only have to save $30,000 to do another one of these projects, not 50, because your property is bringing you that extra cash flow.
So this is where that snowball effect kicks in.
Exactly right. Now, a lot of fancy numbers here. How can we make this even better? Tell me, Charlie.
We could put a granny flat at the backyard.
Yeah.
And in a lot of cases, people don't like to do this because they, get caught up with all the subdivision costs and everything. You don't even have to subdivide as long as you get the council approval. You can overcome all that. But a granny flat is one of the best strategies to increase the cash on cash return. It doesn't necessarily add a whole lot of value to the property, but it's a way to get cash flow sooner, more cash flow sooner, which is the whole point of all this. So if you spend 50 grand on a granny flat at the back, you can expect around $350 per week income from that $50,000 investment. And that's real as well. That is real.
So in our argument's sake, let's say it just does 200 a week, just extra 200 a week, and you're borrowing on that 50,000 as well. So what we're going to expect is that that's about $10,000 extra a year in income, in cash flow, and you will take out about $2,500 in interest payments. So $3,000, let's say. So that's about $7,000 extra income in your pocket, with no further issues or with no further costing in terms of rates and taxes, because you're already paying that on your main house. So there's actually no additional cost on that either. So you're pocketing quite a lot of that. So 7 grand. So on top of the 6 grand, you're basically doubling your cash flow already. After considering the costs, which is great. And then your property's still getting money as well, so the returns are going to be out as well. So that's how you can get highest and best use out of a property. Now, these all sound well and good, but people need access to real asset like this. So you and I have done extensive research. We're finding these properties come in, day out. It's unbelievable. When there's more out there than we can have time to buy, right?
Yeah.
So
which is frustrating.
Which is very frustrating. And these are more than possible investments that young people can get into. If this title of our podcast today has intrigued you to come click on it, have a listen, means you're resourced or enough to do this, or you're on your way to being resourced enough to do this, reach out to us, because
this love to hear from you guys.
Exactly. And this first investment is going to be so important for you to build your wealth. We want to help you. The very least you can do is subscribe to our free podcast. It's just free nuggets of gold that we're dropping for you guys. Yeah. So check us out.
Yeah.
And reach out to us if you need further help. We are out there helping people acquire properties that change their lives. So make sure you stay tuned in. Thanks for joining us today. We're out. Peace.
As always, guys, thanks. See ya.